This is Brad Dennis with BIS Commodities with your weekly wrap-up for the week of July 29th to August 2nd. The Bears have had their way with the corn, bean, and wheat market this week with substantial losses in both. When you talk about bears and bulls, the bulls have the supply side to increase their chances for higher prices. But we haven't heard anything about supply side for quite some time. That might change on August 12th, but for right now, it's been all about demand. Exports, ethanol. Those are the two big demand issues that corn is having right now. Your exports have fallen behind what the government feels exports should be this year. And ethanol, we have lower production and higher stocks. We're not exporting ethanol like we used to. Those two items are weighing on the corn market. Weather, another part that's weighing on the corn market. Right now, there is non-threatening weather. Some maps yesterday went drier. They added rain today. So the maps are always changing. It looks, though, that if we do go through a 10-day period with very dry weather, even though we might have cooler temps, that could definitely take some bushels off the yield. Also, technicals. We finally filled a 420 gap that was made back in May when the extensive rally started. In filling that gap, we saw technicals turn around. We've brought corn down all the way down below $4. Now, $4 level is your insurance price, so that will cut off any kind of producer selling. It will be interesting to see if specs try to press us through that level. I think it'll be very hard for them to do that. The catalyst yesterday to extend the losses were new tariffs. Once again, another bearish factor out there. With putting new tariffs on China that are set to be put in place on September 1st, there's no way China's going to be coming in and buying our ag products. We heard that all this week, that China was supposed to come in and buy them. They did not. Trump said, hey, well, you backed out on your word there, so we're going to increase the pressure a little bit. So all those things added up on a daily basis has pressed us down. Today we saw a little bit of relief, up about 7 cents. I'd call it a dead cat bounce. In December corn, you do have to get over 414 to really make any kind of technical achievement to the upside right now. In that number is about 890. So those are the two areas that we could start to repair this market if we get over them. If we don't, then you're probably going to see some chop trade for the next week while people get set for the next report on August 12th. We are starting to hear some private forecasters coming out with yields. The USDA is at 166. Stone came out with a 167 plus. So they added a little bit to the production number. They didn't do anything with acres. And that's really what this August 12th report, a week from Monday, is going to be about. It's going to be about where are the acres? How many acres do we have planted? Keep in mind that you lose or gain 1 million acres, that equals about 160 million bushels. You lose or gain a bushel, that's only going to be about 85, 90. So it's a 2-for-1 deal. It's more important about the acres right now than it is about the yield. We're looking also at not only the acres, but to get a better idea of what the prevent plant was done so that we can figure out what that overall production number is. And that'll be debated all next week. Informa's coming out with some yield ideas, but it's going to be about positioning themselves ahead of the August 12th report and watching weather, seeing if it turns drier or not. The cool weather, that's fine. If it goes hot and dry, then definitely we've got a little bit of a catalyst to the upside. We did see in the Commitment of Traders report today, too, that the funds had taken about 41,000 longs off the table. And remember, this is up till Tuesday of this week. So Wednesday and Thursday's big sell-off is probably another 25,000. So they've decreased their long position substantially. Over in the livestock markets, a lot of that has to do with these tariffs coming back in. It seems that the hog market was always bid up on Monday, Tuesday, Wednesday, everybody anticipating that there's going to be some buying out of China. Export sales come in. If they do not confirm that, then we see a little bit of a sell-off. Similar thing happened this week. We saw a little bit of appreciation at the beginning of the week, and then it got hammered hard. And pork is going to be one of the things that really needs to see a little bit of Chinese buying with the amount that we are producing and how full the cooler is. We need to get the exports up there on the pork side of things. And without any kind of conversation or trade deal with China, that's just going to be an overabundance of pork around. And then you've got competition at the meat counter, and that cattle market might come off because it does have to compete against pork right now. In the cattle market, you have a wide range of cash trade this week. Southern Plains 111, Eastern Corn Belt 118. Here in Iowa, Nebraska, you're looking at 114 to 116. So a wide range, and it looks like that Eastern Corn Belt is basically cattle guys saying, hey, we need more money for our cattle. Corn prices are going up. You got to help us out a little bit here. And some regionals are paying for that. Big spread between where the futures are and where that cash cattle trade is going on. We have August is in delivery right now, so we'll see if they start to minimize the trade in the August and we start sticking around that and testing that 110 area down the road here. Over in the energies, if you look at a chart of front month crude, you're still looking at an upward trend line. It's just we're pulling back right now. You're looking at limited growth out there, and that's what kind of hammered us down. Still, like I said, an upward trend line. And it's all about kind of the interest rates. This week we heard from the FOMC. We saw that they cut interest rates by 25 basis points when the stock market was at an all-time high. So they're doing that in response to the limited trade that is going on, which is affected by the Trump tariffs. So when the president is looking for a 50 basis point cut out of the Fed, yet the reason that they would need to cut is because of the tariffs that are in place. Very interesting that asking for 50 basis points. They cut 25 the very next day. He imposes or says he's going to impose new tariffs on China to bring that stock market back down. 2910 is a support level in the September S&P, and we went down and touched that today and kind of rebounding a little bit. It'll be interesting to see how Europe and Asia react to all of this. With the interest rates, I think what the president is looking at, he's looking at other kind of interest rates. He's looking at kind of keeping up with the Joneses because of the QE stuff that's happening on a worldwide basis. Earnings still coming out. We're going to probably see a dip in the earnings in the fourth quarter just because of the lack of trade that we have seen. So it'll be interesting to see if we have one of those black Octobers or not. That might be something to look at down the line, get some puts in place or something, just in case that comes. As for next week, to focus on, once again, it's all about the August 12th supply and demand report out of the government. Try to get a better idea on what kind of acres are actually planted out there that will be harvested. And that'll be the key. You got to look at what the harvested acres are going to be. You're also going to want to look at the weather. Now, they've been flip-flopping back and forth. Dryness is not good right now, especially for the tasseled stuff. So kind of keep an eye on that, and that'll show you direction for next week. But that is a wrap up for this first few days of August. Trade well and have a good weekend.